Thank you, sir. Thank you for being with us and walking us through the global production, supply, and distribution of various crops. So, in this, edition of the commodities dialogue, we're going to look at two key commodities where I see there will be a positive or a negative price pressure that we are going to face it. And these two commodities are as well internationally linked, and these are critical in terms of our farmers, farm incomes, and as you are aware that the government is keen on doubling the farmers' income and things like that. It doesn't happen overnight. It also happens how we plan, how we allocate our resources so that the farmer comes to the market with the right kind of product and he gets the right kind of prices actually. So one of the crop that I've chosen is soybean. Where do you see the supply and distribution of soybean in the global perspective? We will come back to India a little later. Where do you see the
Sure.
soybean supplies?
Sure. Currently, northern hemisphere soybean is under harvest, whether it's United States or China, India, all that. And I am able to see very clearly a small increase in soybean production in 21-22 vis-a-vis 2021, approximately 5% increase in production, which will take the production number to about 380 million tons. Okay, and in Q4, obviously northern hemisphere harvest will come into the market, and that will bring some downward price pressure. But at the same time, the southern hemisphere, particularly South America, Latin America, will be planting its soybean, mainly Brazil and Argentina, and therefore we need to track the progress of planting in Southern America. Remember, I mentioned the risk of La Nina, and then therefore that needs to be tracked. But from a demand side, I think demand is certainly going to expand because life is beginning to normalize. Unlike 2020, in 21, I think the sentiment is a lot more positive, and therefore there'll be a robust expansion in consumption also. While production is going to expand by 5%, consumption is also set to expand by 5%, and therefore I expect a fairly balanced market. But remember that crude oil prices, in my view, at least till the end of this year, in this quarter, that is the Q4 2021, may stay at elevated levels. Next year, I'm expecting the crude oil market to start balancing itself. The tightness will gradually reduce, and therefore crude oil prices will moderate substantially next year, which again will have an impact across commodities, whether it is sugar or edible oil or ethanol, on biofuels, and therefore we need to bear these factors in mind.
Thank you, sir. You rightly mentioned about the biofuels, actually. So I'll come back to it a little later.
Yeah, sure.
But you'd also mentioned about China. China, interestingly, I was just reading through one of the news items which came about in Wall Street Journal about a week ago, that the pork prices in China, which used to be about 46 cents a pound in the beginning, actually came down as low as 21 cents a pound. So that basically means that they would need less of soybean. They are more, despite the fact that China is going to require more in terms of producing pork for the next year and things like that actually. So the prices are coming down of the pork, the meat, the largest meat that they consume actually. And so we've seen in the pandemic and during the pandemic or prior to the pandemic, China had this tendency of accumulating commodities. Yes. China had, not only its financial aspirations in terms of developing its commodity markets to control the prices globally, but also had recently started playing a larger role in terms of, so be it crude oil, be it metals, be it soybean, be it corn. So we know, they have been accumulating stocks over a period in time actually. So given these poor prices, do you see China would be not a big factor in terms of the soybean demand in the going forward time?
Correct. No, first of all, we should think through why pork prices dropped by 50% or close to 50%. Remember, last year was a pandemic year. Global value chains were disrupted. Global supplies were disrupted, and China in 2020 was just about recovering from a major issue of African what is that, African swine flu, okay, which resulted in culling of probably 2 million or a few million heads of hogs, and therefore they are recovering. And last year also meant that imports into China had also slowed down, but that also impacted demand. A lot of people, even within China and other parts of the world, started to believe that the virus is actually spreading from animals. Okay? It was a myth. It was a wrong conception, wrong idea. But therefore, the demand itself for meat started to reduce. But that's rebounding now. It's coming back. And my China's own internal production of soybean is about 19 million tons in 21-22. My expectation is that China will continue to import very close to 100 million tons of soybean in 21-22, which has been the norm in the last, it's been gradually rising 60, 70, 80, 85, 90 million tons, but it will hover around 100 million tons. Maybe I would say between 95 and 100 million tons. It will also depend on their inventory building policy. In some cases, in cotton, for example, they want to sell the inventory that they have built. In case of soybean, in my view, they will start building inventory because I'm sure they would have recognized the risk to soybean production in South America, possibly because of a repeat of La Nina. Therefore, they will import close to 100 million tons for their domestic consumption plus their reserves, and therefore the global ending stocks, it'll have a very marginal impact on the global ending stock. Their stock may possibly rise. China's stock may possibly rise by 2 or 3 million tons at the end of the year because of the reserves. Yeah.
Thank you, sir. You rightly indicated that China is going to remain an importer, and it'll import the same level at 100 million tons and things like that. Actually, so having said that, China used to import the soybean, not the meal, not the oil. A little bit of meal and little oil they also do import, but mainly they want the raw material to be produced and sent over there. But on the contrary, there is another situation developing in the world, which is out of climate change, out of pandemic, that you may want to call it actually, that number of people are living at home. So while they are living at home, the consumption goes up a little higher. Actually. That's number one. Number two is they take more care about their pets. Actually. They spend more on pet foods and things like that actually. So I was just reading an analyst report on soybean some time back, and it had clearly indicated that meat consumption and the pet food consumption had gone up during the pandemic, and as a result, the protein demand has come up. And one of the major protein source in the world is soybean, and hence as a result, soybean will likely be pressurized. And another factor which is adding up to the protein demand is the biofuel demand. Actually. So in fact, interestingly, what I read is Chevron is is investing in one of the agricultural commodity majors. Actually, so that is to say that like you crush more of soybean, and we need more of soybean for our renewable renewable fuel production, which is through the soy oil, apart from palm oil, which is also used in renewable fuel production actually. So an interesting number if I can throw is like the US crushes somewhere around 500 to 550, but it has almost doubled to around 930 or 940 million gallons of soy oil, which was produced last year. And if I were to believe this industry estimate, this is going to quadruple in the next 1 year or so, actually. So, what is the impact? What will be its impact on one, China demanding more of soybean, but soybean is being crushed in the US itself, and US is a major supplier to soybean. So, will China be willing to take more of soy meal rather than the bean itself, actually? And the oil, which is very close to us because we are a net importer, and so will this actually impact the prices and how you see these panning out?
Yeah, actually, it's very interesting, but the situation is actually evolving at the moment. We all know very clearly that the Biden administration is pushing for biofuels, whether it is ethanol or biodiesel. They are pushing for it. In fact, they are the Biden administration is in some way less supportive of the shale oil industry and more supportive of the growers in the US, and therefore demand for biofuel is certainly going to rise, whether it is ethanol made out of wheat, corn, or whatever, and of course biodiesel made out of American, in the US particularly soybean oil. There is no doubt at all. Demand is going to rise. But look at, you also talked about, and so long as crude oil prices remain at elevated levels, the demand for biofuels will continue. But once crude oil prices start to correct, then the discretionary blending, that part will actually reduce. Wherever there is a mandatory blending, that part of the demand will continue, but certainly discretionary blending will decline. This is one. The second part is you talked about a lot of protein meals required for pet food, etc. Yes, very important. It's only last week that I spoke in a feed industry conference about protein meal for the feed industry, animal feed and livestock industry. Yes, there is no doubt at all that we need more of protein meal, but all this demand is already factored in the market. Number one, I don't think there is a substantial or marked incremental demand because of the pandemic and the lockdown, etc. In case of pet food, in the US in particular, now pulses are being used increasingly because pulses are also a great protein source. Therefore, it is not just soybean, but also pulses are being fed to pets, and even in Europe, this trend is catching up, and that is why you find pulses prices quite firm. Therefore, in some way, for pet food, soybean and pulses may be competing, but the question simply is, notwithstanding the pet food demand and notwithstanding the biofuel demand, biodiesel demand, particularly for soybean, the incremental demand is going to be not so big as to impact the global prices of soybean and soybean products. This is number one. But the joker in the pack is South America and La Nina. If the planting of soybean in South America and Brazil and Argentina were to slow down, if they face weather aberrations, if the outlook in this coming quarter, that is Q4 2021, suggests that in Q1 2022 there may be a supply shock coming from South America, then of course prices will start spurting. But it's actually an evolving situation, and we need to track this evolving situation to get very definite cues from the market.
That's interesting, sir, that you rightly indicated that people have started replacing soy meal with pulses because of the price parity and things like that, actually. So that'll be a spillover impact on the pulses prices and pulses availability for India.
Right.
So let's get into the Indian soybean situation.
Yeah.
So India tried a lot, but a little in terms of that. I would say little is because the kind of increase that was given to the support price was a little less. But again, having said that, over a period in time, we've seen that minimum support price is just indicator, and it's just giving them a signal as to what you should sow and things like that. Actually, keeping that minimum support price aside, one of the indicator for the farmers is the last season's prices. Last season's prices. I was just watching the futures contract actually. Up to September delivery, it was at around 8,600, 8,700 per ton, and it in fact went up to 10,000 rupees a ton actually, and it came down immediately now to around 5,600, 5,700 tons. The contract actually. So one of the situation that is also coming out, keeping aside the international situation and the wild card in terms of the South American production and the La Nina impact and things like that, is that our production is also going to be lower. Number one, and number two, if I look at the monsoon, that it is still raining when the crop is being harvested in the lower part of the northern hemisphere actually, especially in India. So will it impact the availability of soybean? Because we've not seen a big increase in terms of the sowing numbers actually. So and one of the fears that was being put up by SOPA is that it's going to impact soybean availability. The monsoon is going to impact how these numbers are going to pan out in India, particularly that we are sensitive to soybean.
I agree. Let me put it this way. I've been tracking soybean and the oilseed sector for very long years. My own estimate, I provided my estimate to the Niti Aayog. Someone from very senior official called me, and I shared my view early September of the soybean crop, and I said it'll be between 106 and 112 lakh tons, which is say 10.6 to 11.2 million tons. That's my estimate, and I stand by that number even today. And when I saw the government of India's first advance estimate, it showed, in my view, an overstated number of 12.7 million tons. Then I also looked at last year. In fact, last year, government's first estimate was 13.7 million tons for soybean. And the fourth estimate, it was brought down to 12.9 million tons. Therefore, this 12.7 million tons for 21-22 of the government of India's estimate, in my view, again, with due respect to everybody, is overstated. My own number will be, as I said, closer to say 10 maybe closer to 11 million tons, or 11 million tons could be the outside limit. This is my number. And when you look at our domestic demand, when you look at the carryover stock, and when you look at the export demand, my sense is if these 11 million tons production holds, if that number holds, then the tightness that we saw last year will ease somewhat this year, and the 1.2 million tons of import that the government has allowed will also somewhat ease the tight supply situation. And therefore, I don't see I don't see a scope for a major spurt in soybean prices in the year 21-22. It will not be as the market will not rally as much as they did in 2021 because of slightly augmented availability, both in terms of domestic production and in terms of a small import of soy meal. And my sense is that this import of soy meal possibly and can potentially become a steady import policy for this sector.
Thank you, sir. So that brings me to the next question about the prices. So you are pretty much confident that the prices are likely to remain where they are, and I mean, it more or less remain where they are because of the harvest pressures that are coming into the market, and many people are willing to sell compared to people who are willing to buy that actually. So the point is, when we get into the lean season of supplies into the market, the prices start spurting actually. Number one, and that lean season is going to more or less match with the South American and the La Nina factor actually. So my question is, okay, so even I am watching the futures prices of soybean, which is like same, including the holding cost. It is just reflecting, the future prices of soybean for November and December. But post December, let's say Jan, Feb onwards, will it start spotting to the 10,000 levels what it was in the last one?
To my mind, that situation we will be able to imagine if there is a problem with the South American crop. If South America faces La Nina, which is dry condition, and if soybean planting is impacted, certainly that will have an impact on the global soybean prices, global soybean prices, global soybean oil prices, and that will have an impact on domestic India's own soybean prices because we are also importing close to 3 million tons of soybean oil, which is what close to 20 million tons of soybean, correct? And therefore, through that oil import route also, there will be an impact on domestic prices. And therefore, at the moment, to think about or to talk about whether or not soybean will go back to 10,000 levels will be a little speculative. As I said, this is an evolving situation. We need to keep a tab on the market developments. But October and November will be very, very crucial from the South American perspective, tracking La Nina, whether it's going to be a mild La Nina or a severe La Nina, what is the impact on planting, etc. I think that is what is going to make this market quite interesting.
Thank you, sir. And you had also mentioned about your content numbers, which is more or less matching with the industry numbers in terms of the production is going to be lower. And on the other hand, we are crushers sitting back with firmed up contracts for export and things like that. And at the same time, the edible oil, we are dependent on edible oil. So what will be the impact on the export numbers for soy meal and the import numbers for the edible oil, for especially soybean oil?
Yeah. In my view, there will certainly be a correction. I'm assuming normal conditions, no big supply shocks. With that assumption, I would think there'll be a correction in the global soybean oil prices, and therefore India will continue to import close to 3 million tons of soybean oil. That is number one. But let me also take this opportunity to mention that India will import more sunflower oil this year because there's a big rebound in sunflower seed and oil production in the Black Sea region. But that apart, because we are discussing soybean oil, we will continue to import 3 million tons of soybean oil if we crush all the seed that soybean that we harvest in our country. And I'm sure after domestic consumption, there is possibly export opportunity for about 2 million tons of soy meal, because we have some traditional markets that we continue to service, and we will continue to service these markets. And therefore, I won't be surprised if our export of soy meal is approximately the 2 million tons. But the domestic factor that we need to watch is primarily the rupee. If the rupee were to weaken, it will improve the export competitiveness of our soy meal. But if the rupee were to strengthen, it will probably erode the export competitiveness. And therefore, we need to look at domestic production and prices. We need to look at the currency factor, which is the rupee. And we need to look at the import value of soybean oil, which will depend on the international market. So therefore, this is a situation I'm able to see.
Thank you, sir. So you had rightly indicated about the Indian soybean situation, actually. So let's move on to cotton, which is the crop, which is again globally linked to. So coming to cotton, unlike soybean, I've seen cotton demand is less impacted by the pandemic, and so I happen to wonder. So did I purchase any shirt in the shop while the pandemic was on? Even the shops were closed actually, but surprisingly, if I look at the numbers, the demand is remaining the same. The stocks are as good as it was prior to the pandemic levels and things like that. Actually, only the production is coming down a little bit actually. So where do you see the next quarter for cotton panning out in terms of the global situation?
Yeah, I think that's interesting. Primarily, in case of cotton, we must remember China is the world's largest producer and importer of cotton. And China got out of China's economy started to recover by July 2020. Okay, it got into difficulties in the first quarter of 2020, but it started to recover and normalize from July 2020 onwards. So this is important. Therefore, China's consumption of cotton was quite robust in the second half of 2020 and certainly in the first half of 2021. For this year, 21-22, I am expecting global cotton production to rise by about 1.5 million tons to 26 million tons. Now these numbers are in million tons. I think if you want to convert them into bales, which in India is 170 kilos, multiply by 6. That will give us the number of bales. Very approximately multiply by 6 and you will get the bales. Now when we talk of consumption, this year in 21-22, global consumption and Indian consumption both of cotton are certainly going to rise. Again, because life is normalizing, economic activities are picking up, and the another factor that we must remember is the stocks of cotton world over the last several years have been quite burdensome. 18, 19, even it touched 20 million tons at one point of time. And therefore, with a small increase in production to 26 million tons, consumption will also rise in 21-22, but slightly trail that incremental production. Consumption will rise by 1 million tons. And therefore, and then with this large stocks, I see no dearth of availability of cotton for the world. Currently, cotton prices are at record levels. Okay? Something between 90 and 100 cents a pound in the US. Although we don't get that price for our export, it's substantially discounted. But I expect these levels to somewhat become softer. These price levels going into Q4 of 2021. But after that, in Q1 of 2022, much will depend on the report from the USDA of US's planting intentions, weather outlook for the northern hemisphere, etc., etc. Therefore, again, cotton is a very, very interesting commodity. Supplies, I don't see any problem. Prices likely to remain somewhat soft with the harvest in the US and in China and in India, and then the situation will evolve in the last quarter, because again Brazil is again another big producer of cotton, and then weather conditions there will become quite critical.
Thank you, sir. So if you, as you rightly indicated, the stock levels have been somewhat painful, except for the year in which the pre-pandemic year, that I would say that 1920, where the stock levels were slightly lower, but we are again to the same levels in the last 2 years and things like that. But this year again, having said that, the production is going to be little lower, especially driven by India, where we are also estimating the production to be lower. But the prices will be at the same level as it was in the last year. Will it suffer a bit, or where do you see the prices are headed?
You're talking about domestic prices?
The international prices. I'll come to the domestic
international prices currently, as I said, the Kotluk A index, I think, is between 90 and 100 cents. I'm expecting certainly some softness to set in the international prices, primarily because of harvest pressure in the northern hemisphere, in the United States, in India, in China, etc., in Pakistan, across the northern hemisphere. For prices, there will be a small correction in prices across the world, which obviously will reflect in our own domestic prices, because we are fairly reasonably well integrated with the global market in terms of our cotton export, and also we import a small quantity of cotton, extra long staple, etc. And therefore, global factors will certainly have an impact on our domestic prices, and I expect that in Q4 2021, cotton prices will stay above MSP, but are not going to rally. Put it that way. I think that's a very crucial point. They will stay above MSP, but will not rally.
Okay. Thank you, sir. So let me come to the Indian, the production levels actually. Now that we are into the crucial stage in Kharif, and cotton would have started yielding up, the pickings would have started happening. So the government again this year estimates the production to be something like 35, 36 million tons or something, but lower than the last year, number one, and that's because of the lackluster rainfall situation in the major growing areas and things like that. And another fear that the industry is having at the back of their mindset is the pink bollworm. Like in the last year at the back end of the season, it impacted production and quality of the crop as well, actually. So where do you see Indian numbers are panning out to be in the current
Yes.
season?
No, I've been tracking cotton, as you know, but this year cotton acreage is lower. In 21-22, cotton acreage is lower by, if I recall correctly, some 700,000 hectares, 7 lakh hectares vis-a-vis last year. This is number one. And we can't ignore this fact. Number two, we have also had two breaks in monsoon, one end of June and one early August, and in major cotton growing belts, including the state of Gujarat, Saurashtra, and all this is certainly going to impact cotton yields. There is no doubt at all. We had excellent rainfall early September, which is of course very positive. More further damage was certainly arrested. But when I look at the acreage, when I look at the input availability, agronomic practice, and the weather rainfall distribution, I still believe the government's estimate of 36.2 million bales of 170 kilos is somewhat overestimated. My own number of output, cotton output, is between 34 and 35 million bales. That's the level I would think is right. And it is possible the government may revise its number in the subsequent estimates that they would issue. But what is important is, again, if we have to look at the balance sheet of cotton, I think we will have enough cotton in our country, because we have an opening stock of approximately 10 million bales of cotton with Cotton Corporation and spinners, public stocks plus private stocks. Therefore, I think availability should not be a problem at all this year.
Okay, so will that have an impact on consumption? So one is that we are coming out of the pandemic into the normal situation. So people have started moving and the shops are open. The industry has started operating, especially the textile mills and things like that. And in addition to that, another new demand which is coming up is the production-linked incentives, which is announced by the government in terms of increasing export-oriented production in the country, actually. So will that be a wild card in terms of traders who had commitments in terms of higher export commitments and things like that? And will that actually pan out to be giving farmers better prices in this season? What is your view on
I think
that?
it's an interesting way of looking at it. PLI is of course important, productivity linked incentive scheme. But we must remember we are already exporting a lot of textiles. And the question is whether the world market is in a position to absorb incremental quantities of textiles from India. And then we have to compete with countries like Bangladesh. Okay, remember. And therefore, while PLI scheme is good, it will lead to certain additional consumption of cotton in our country. That is why I have assumed in my balance sheet, although the industry believes that cotton demand in India will be about 30 million bales, I would put it at 32 million bales. In fact, a small increase from what the industry has estimated. And therefore, while PLI scheme is very good, the intention is very fine. What is important is whether the world market is ready to receive additional supplies of textiles from India. Yes, I'm sure there'll be certain incremental exports, but that incremental export will not be so much that it would affect domestic availability of cotton for the processing industry. And then we also have a large opening stock, as I mentioned, both public stock and private stock of over 10 million bales. More important, we'll also be importing. The import policy is open usually. My estimate of import in 21-22 is between 1 million and 1.5 million bales, particularly of superior cotton varieties, fine varieties, extra long staple cotton. Those varieties will be importing. So when you take opening stock plus production plus import, the total availability is going to be quite comfortable. And then when you look at consumption and export, I think we will still be left with a decent amount of ending stocks for the year.
So it will not impact the prices?
No, it will, as I said, only demand and supply factors, fundamentals are not the only factors to impact prices. There are other factors that would drive prices. For example, if world prices were to rise, if the rupee were to strengthen, or if the rupee were to depreciate, and there will be export demand, there will be more going for export. Therefore, there are multiple factors that drive prices. But if you look at demand and supply alone, I think there is no big case for a big rally in cotton prices within our country.
Thank you very much, sir. It has been insightful hearing you about the cotton and the soybean situation, and we had faced enormous amount of typical situations which we had not seen in the pre-pandemic era. So it was very insightful, and we would like to have you it again for some more crops which are more important and in other commodity groups as well. Thank you.
Thank you.
Much, sir,
thank you, Shunmugam. I'm delighted to be here, and I'll be very happy to be back. I think let's keep this discussion going. And let me end by saying good luck. God bless you all. Stay safe.